All right, so a random video at midnight. Technically, it is October 12th, Sunday, but random video at midnight. I just wanted to briefly kind of go over some things that I've been seeing on X, go over the main topic of this video, which is covered calls and my opinion of it, and kind of the way that I view them. And then, of course, my last couple of videos have been popping off actually. So I've been getting a lot of comments and I thought I would just go ahead and read them off in this video. So there's a handful of things I wanted to talk about, which prompted me to start recording. But first things first, this past week, I am down slightly more than 5%. Past month, I am up 9%. 3 months is 25%. Year to date, 129, almost 130. And then year over year 217, and then all time is 468. Now the first thing I wanted to briefly go over was what I've been seeing a lot on X this past week, which is Robinhood, or I guess a lot of people haven't been able to purchase crypto on Robinhood. So I don't know if it's actually Robinhood blocking these trades or what. I haven't done a lot of research into it and I'm not really sure how that works. But apparently a lot of people were trying to buy crypto on the dip and they weren't able to. So some people are saying this is like GME, AMC all over again. A lot of people are saying, man, I'm never going to use Robinhood again. They're going to switch over to SoFi, whatever. I mean, I own SoFi stock too, so it is what it is. I'm happy with it. And speaking of SoFi, they've actually been making some secret moves here. Not really secret, but just behind the scenes. I don't want to get too off topic. But when it comes to Robinhood allegedly preventing people from purchasing crypto, obviously that's not a good look, right? They have a lot of issues in the past when it comes to not allowing people to trade certain stocks, GME, AMC with the short squeeze, right? Even though I don't think that was completely their fault, right? They have market makers, they have people to answer to. And also when you have something that is super unnatural, like that kind of a short squeeze, I mean, eventually the party's going to come to an end. Anyways, obviously this is not a good look. And what comes of this kind of depends on the market and the direction the market goes this week. So if the market takes a dive, well, then people won't be as mad about not being able to buy the dip because, the market went down even more and now they're able to purchase crypto at even lower prices. But if this upcoming week, or I already know crypto is 24/7, so you guys don't have to correct me in the comments, but obviously a lot of these big moves aren't going to happen until the rest of the markets open, like the stock market and whatnot, and we get a lot more money flowing around, a lot bigger moves. But if this upcoming week crypto ends up becoming green, that will actually make it seem like the conspiracy theories are true and make it seem like all the conspiracy theorists on X and whatever on YouTube, it'll make it seem like they're right. Because if you prevent people from purchasing crypto on the dip, and a lot of these conspiracy theories start popping up like, oh, Robinhood's the financial institutions and hedge funds that own Robinhood or are above Robinhood, they're preventing people from purchasing crypto at low prices so they can come in and scoop it up so that they can sell it to us at higher prices the following week. If the crypto market ends up being green this upcoming week, then it makes it seem like those conspiracy theories are true. So a lot of what comes of this depends on the direction of the market. And I also think this is a part of a broader trend that I see where Robinhood's momentum might be starting to slow down, if that's even possible. I mean, if you look at the chart of Robinhood, I mean, this is pretty ridiculous. Year over year, it's up 442%. So it doesn't seem like the momentum is slowing down, but I think the broader story, if Robinhood stock starts to go down, is going to be, well, they did prevent us from purchasing crypto. A lot of competitors like SoFi are starting to catch up, right? SoFi is really making some moves on when it comes to crypto. And of course, with their savings account, it's yielding slightly more than the gold cash yield that Robinhood is offering right now. It's not a huge difference maker, but I mean, if you're trying to attract high net worth clients that have hundreds of thousands, if not millions of dollars, they really do care about that yield, right? A slight 0.01% difference in yield could be a lot of money to somebody that's a very high net worth. And of course, with this whole stock tokenization trend that is playing out, I think it's a little bit too soon. So that story might start to play out where Robinhood is investing aggressively in these things. People don't really trust it yet, right? We started to see that a little bit with the OpenAI token, where they came out and said this is not actual stock in the company. When you purchase this with Robinhood or whatever, you're not actually purchasing shares of the company. So there's a little bit of that confusion, right? That distrust that people have. So I think we will see this broader shift in, I guess, the story. Well, at least in the short term, right? I'm still very bullish on Robinhood in the long term, but I think in the short term, we could see a slight sentiment change around Robinhood as a company. And of course, a lot of that is going to benefit SoFi. So like I said, with the whole Robinhood preventing people from purchasing crypto thing, that is going to be heavily dependent on the direction of the market this upcoming week. Like I said, if crypto is green, well, then a lot of people are going to say, well, they prevented us from buying because it was going to be green next week and they want us to pay higher prices for the crypto because they scooped it up. But if it ends up being red, then I think a lot of people, they won't really care about not being able to purchase crypto this past week because obviously they can buy it at lower prices now. So we'll just have to see. As the saying goes, price moves and the news follows, right? If price goes up, if crypto prices go up next week, people will say that the conspiracy theories are true. If prices end up going down, people will just forget about that whole incident. But now I want to get to the main topic of this video, which is covered calls and my perspective on them, how I like to use them. So for the most part, I would say the majority of people think that covered calls and option premiums in general are a source of income. And I guess if you're a very high net worth person that's trading millions of dollars and you're collecting like hundreds of thousands of dollars in option premium, well, then I guess you could consider that income. But I don't like that mentality of looking at covered call premiums as a source of income or covered call ETFs, because as you can see with this Robinhood covered call ETF, it is down over 8%. Which is somewhat in line with what we saw in the actual underlying stock, the actual stock of the company. It's down 8.8%, but slightly up after hours. So it's not exactly the same as the ETF, but it's somewhat in line. But the thing that I don't like about this is you're taking on almost all of the downside in Robinhood stock, but you're not participating in all of the upside. If we take a look at the monthly performance, you're only up slightly more than 6% versus Robinhood, which is more than 16%, right? If you take a look at the last 3 months, right? 43% for Robinhood, 3 months is only 4% for this ETF. Now, I know a lot of people are going to say, well, that's because it's a very high dividend yield, right? Most of your returns are going to be in dividends, right? But if you're going to participate in almost all of the downside, why don't you just own the actual stock and try to sell covered calls on your own, right? Now, obviously, I'm not a financial advisor and I'm not telling you should do it, especially not right now, because I personally think Robinhood has more downside to go. But I'm just saying, I don't like this mentality of relying on covered calls as a source of income. And also, you have to think, if covered calls are your source of income, what are you going to do in a bear market? If you're selling covered calls in a bear market, not only are you collecting lower premiums, but you're also capping out all your upside when things start to swing up, right? If we take a look at Robinhood, the past 5 years, or we'll just go to the max chart, right? During this bear market right here, if you were selling covered calls at $10 a share, the strike price of $10, you completely missed out on this train ride. Or let's say you tried to be quote unquote smart and sell covered calls at the strike price of 38, right? The IPO price. So let's say you were scooping up shares right here for about $9-10, right? And then you triple, almost quadruple your money, and you're like, okay, I'm not going to be too greedy. I'm going to sell some covered calls here at 38, which is the old IPO price, and I'm just going to be happy with my 3x, my 4x gains, and I'm not going to be too greedy. Well, you still missed out on an extra $100 per share, right? You missed out on all of this upside. So what are you going to do in a bear market when you're relying on covered calls as a source of income, but you're completely capping out all your gains? So the way I look at covered calls personally is when I make a decision to sell a covered call, it's basically the same mentality as me completely selling that stock. For example, Palantir, I've sold a lot of covered calls on this stock, and I've not only have I collected all of my principal back, but I've collected even more than my principal, right? So I am very much in the green when it comes to Palantir, and as of right now, all of my shares are up for collateral. So the way I look at Palantir right now, even though on paper I have 200 shares, I don't even consider myself as a shareholder at this moment, right? Because if I start to get greedy, if I start feeling that FOMO of, oh, what if Palantir goes up even more? What if it hits 200? I'm going to miss out on that upside. Maybe I should pay back my covered call, right? Collect that or realize that $1,000 loss so that potentially I could be there for that upside to $200 per share. I don't really like to look at it like that. Once I make a decision to sell right at that 160 strike, it's a done deal. Obviously, if I decide to roll it out into the future at maybe a 170 strike, expiring December, whatever, right? And then that would be me basically telling myself I am okay with selling this at 170. So as of right now, even though I technically have 200 shares of Palantir, I don't consider myself as a Palantir shareholder mentally. I'm okay with letting it go and just collecting my profits. And even though I've sold a little bit more covered calls than I would like to when it comes to Robinhood, I think right now I only have 700 shares that are not up for collateral. I wanted to keep at least 1,000, but I think Robinhood has gotten to a point where there's the risk of going down is greater than missing out on potential upside, if that makes any sense, right? The risk to reward is just not there for me right now. I think Robinhood has a pretty good chance of going back down to $100 a share. And if the market is in a really tough spot and we enter a bear market, I think Robinhood could see $85 again. Just being completely honest with you guys. And this is not coming from a Robinhood bear, right? As you guys can see, Robinhood is my number one position. I am very bullish on the stock, but I'm just being real with you guys. I think it's very possible that we see $100 a share minimum for Robinhood. And if the market is in a really bad spot, I think $85 is very possible. So the way I like to look at these covered calls is just me saying I am okay with selling Robinhood at 170. Even though I would like to keep every single share, I have to be smart and at least take a little bit of profits, right? To have that cash cushion. So I'm not looking at it as a literal source of income. So I don't know if that was helpful for you guys. I just wanted to share it because it's one of the things that has helped me personally, right? That mentality shift of not viewing covered calls as a literal source of income, but more like a tool, and just being okay with selling that stock at that strike price. And obviously that comes from before you even place the trade. You need to actually pick a strike where you're okay with letting go of shares of that stock at that specific price. But for any of you guys that are new to my channel, I know I recently have been getting a lot of new subscribers here. I'll just briefly go over how much I have in each stock. Obviously, the market took a dive last week, so I do have less on paper than I have maybe a couple videos ago when I was at all-time highs, but it is what it is. Obviously, Robinhood is by far my biggest position. If we look at today's return, I was down over 19K in one stock. If we take a look at total return, amazing returns from Robinhood, Palantir, SoFi, even American Express. And then, of course, if we look at total percentage change, 1,250% in Robinhood, Palantir almost 900, SoFi 264. And then, of course, American Express over 115%. And if any of you guys don't yet already follow me on my X, this is my X right here. Recently, I made this post saying that I finally started a $1,000 SoFi Roth IRA, and that is going to be the one that I try to grow as quickly as possible, right? It's that $1,000 Roth IRA challenge that I've been telling you guys about recently. Some of my older viewers or my longtime viewers will know what I'm talking about, but I will start depositing more in my Robinhood IRA just because it has that 3% match. But SoFi, they only give a 1% match, and that's if you do reoccurring. So I'm not even gonna mess with that. I've decided to do the $1,000 challenge in the SoFi Roth. So I don't know how that's gonna work yet in terms of video. Maybe I'll switch back and forth, but we'll see where that goes. I'll keep y'all updated on that. And then there was an interesting post that I saw from Statistica. And basically this chart is about where pensioner poverty is most prevalent. So it's a share of people 66 and older living in relative income poverty in selected countries in 2022. So this isn't the most recent data, but it's still somewhat recent, and it just kind of gives you a good idea of which countries older people seem to be struggling in. At least that's what I get from that chart. You guys can correct me if I'm wrong, if I'm misinterpreting it. But wow, South Korea, I don't know what's going on over there, but I guess, older people are struggling. And then Estonia, I'm gonna be honest with y'all, I don't really know where Estonia is. New Zealand, people seem to be struggling there. Costa Rica, which is interesting. And then you have the United States, of course, we're smack dab in the middle. And honestly, I think this is just really sad. First of all, you guys shouldn't be relying on the government. I'm not here to play politics or, preach to you guys that Republicans are better or Democrats are better. Just overall, in general, a good rule to live by is to not rely on the government, because it doesn't matter if it's Republicans or Democrats. They're both pretty much going to screw you over. And if I had to guess, I would say most of these pensioners or these retirees are living on fixed income, right? Or at least the governments are investing in fixed income and then paying out those pensions through that, right? And fixed income, for the most part, does not keep up with inflation, right? I think more retirees should have. Obviously, on Monday morning quarterbacking, hindsight is 2020, but I think it would have been much better to have an equity position building for retirement along with some fixed income if you just really want fixed income. But definitely, I think a diversified pool of equities, right, that have dividend yields, dividends being paid out to you as a source of income, constantly compounding. I just think that overall is a much better strategy. And I think for sure the younger generation that's getting into stocks, right, it's the Robinhood generation. I think we pretty much understand that equities are the way to go. So hopefully this issue resolves itself in the near future. And along with our generation, right, the generations that come after us, hopefully they pretty much understand that you can't rely on fixed income or the government. All right, and we finally get to your guys' comments on my previous videos, and my account or my YouTube channel. Sorry, my account actually has been going down, but my YouTube channel has been popping off recently, and I've been getting a lot of comments from you guys. So that's always good to see. It kind of gets lonely in here. I'm not going to lie. Whenever there's only like one person commenting and I'm reading off only one person's comments, it kind of does get lonely over here. But we have Luke that said, "Wild Day puts would have went crazy." And yeah, it's easy to look back and say, man, I should have bought an inverse ETF. I should have bought puts. I should have shorted. I should have done something in futures and crypto, something. So it's easy to look back and do all those things, but I'm going to just be real with you. In the heat of the moment, right, when markets are at all-time highs, it's very hard to short. It's very hard to buy puts and actually bring yourself to do that, right? Even selling covered calls is hard for me because I don't want to cap my gains. But we have not financial advice that says QQQ 520, natural and healthy 50% retracement when you measure from April lows to October highs. And yeah, I somewhat have a similar view of QQQ. If we switch over to the trading view chart, as you can see, there is this very nice gap all the way down here at a perfectly round number 500. So you already know, I mean, gaps are not a guarantee, but whenever you have a nice gap like this on the weekly chart at a nice round number like 500, I'm not going to say it's a guarantee because obviously I don't know, but it is a pretty scary drop from here. And if we do a little percentage check real quick, let's see how steep of a drop that would be. So that would be almost a 20% drop from the highs, the recent highs. So that is a very nice round number, 20% drop at another nice round number, $500 a share for QQQ. I'm not going to say it's a guarantee, but it is something that you should mentally prepare yourself for. And not financial advice also says NVIDIA sells the shovels, which is true. Similar to Robinhood, they sell the shovels. We have TIA that says QODY dividend twice a week. And on you guys already know my opinion when it comes to covered call ETFs. I don't like covered call ETF dividends. I think it's much better if you just own a diversified pool of equities and then you just kind of figure it out yourself instead of relying on an ETF to do it for you. But it is what it is. We have, I'm just going to call you Miqui, if that's okay with you. Miqui says, hey, you answered my question about TLT last video, so thanks for that. Interesting to hear your input. I agree in the long-term bonds suck. Looking at TLT for a short-term trade because I'm expecting a bear market soon and TLT sentiment is in the trash, which is true. Somewhere to park some cash while the market cools off while collecting a nice yield. I agree commodities are the play into the next coming year. I think commodities will continue to outperform equities in the next bull market, but I'm speculating quite a big cool-off period for gold and SLV into end of year. Along with stocks, gold and silver trend line is way too steep to sustain for the long term. That's my uneducated opinion. Cheers, my friends. Now, keep in mind when it comes to trend lines and steepness, that all depends on your perspective and how you're looking at it. Obviously, if you're looking at it from a long-term time frame, and just if you kind of zoom out a little bit, things don't seem very steep. But if you're going all the way down right into like the 2-hour time frame, very short time frame, and you zoom in, obviously it looks very steep. It looks really scary, right? But keep in mind, if you zoom out and you go to higher time frames, all of a sudden it doesn't seem that big of a deal, right? If you look at the weekly, it just looks like a little cool-off period coming back down to the 9 weekly moving average, right? So it doesn't seem that bad when you zoom out. So I'm not saying you're wrong. I'm not saying I disagree with you. I'm just saying when it comes to trend lines and steepness, it all depends on your perspective, of course. But we have Obi that says, Oklo saved me today. And I think Oklo is that nuclear company, that nuclear stock. And I guess I missed out on that one too. But we have E46 that says, great gains. Congrats, bro. Appreciate it. We have Onda that says, you got lucky. I'm a penny stock investor. Luckily, only down 50%. I've seen some down 60%. And honestly, that kind of scares me because a very small drop like the one we had last week, if that is causing some people's accounts to be down 60%, if we enter an actual bear market, you're going to get a margin call. So that is kind of scary. But we have Hover Labs that says, good video, thanks, I appreciate it. We have Bunny and Rabbit says, I love your number. I am curious what happened last week that you were down. I'm not talking about Friday. Friday I was also down, but I'm still up on the week. So if you look at my account, my top 2 positions are Robinhood and Nike. So usually if there's any big move in my account, it has to do with either of them. So maybe I think Nike did also have a big drop, so that might have been what you're talking about. And when it comes to I love your number, I'm not really sure what you're talking about. Maybe it's the 300K, nice round number. But you also ask, I guess you invested 50K and it was a one-time investment, or did you keep adding when you or did you keep adding when did you start? Okay, so I think you were asking like multiple questions in one, so that kind of threw me off. But when it comes to when I started and how much I deposited, all the way back here, it was April 22nd, 2019, according to Robinhood, and it is roughly $50,000. And that is not a one-time investment. That was me just slowly depositing over the years. And then recently I did stop depositing money altogether, and I'm just coasting off of the equity that I have in my account. So I hope that answered your question, Bunny Rabbit. But we have this very long comment from Sean Reed. He says, so I clicked on this video because the amount I have in the markets is essentially the same as you, though I dropped only 1.88% Friday because of my significant GLD holdings, 55% of my portfolio. I've also got a round lot of Hood, which was so darn close to being called Friday. Something I wanted so I could rotate it elsewhere, but that wasn't to be. Same for my 2 round lots of Tesla. I've got a feeling holding those for a while is going to be a bit painful, but because Tesla has natural volatility anyway, I'll just hold them. I've also got 6% in Ulti, which they'll also down painfully, being set on a drip for compounding. I figure we'll recover in time and I'll be fine on. GLD saved my bacon Friday, but like you, I'm no longer over 300K, just 10K. Though not realized losses, thankfully. My hope is a lower high rally Monday. If that happens, I might be able to rotate. I doubt this is the end of the world, but I do think the markets might have started their top, but it all depends on Monday's action. If you bought a 152.5 Hood call at the end of the day Friday, there's a chance it's mine. I am bullish on Hood, but not where it was. I expect a lower high for it, and then I'd be bearish on it and most of the market. So a lot to get to in your comment. So first of all, you were only down 1.88% Friday because you have a lot of GLD. Congratulations. And then I assume you had some covered calls on Hood that expired worthless. So congrats to you on that as well. Tesla, I do think is going to be a little bit painful in the short term. So I do agree with you on that. Now, as for ULTY, I think you're talking about another covered call ETF. And like I said, you already know my opinion on those. I'm not really too attracted by them, but definitely I am interested to see next week's action in the markets.